Okay, that's not. I just for the recording purposes, guys. So, because again, as one of the guys that all he does is watch the webinars, he's not actually able to get into the webinars live. So I have to make sure that everything in the recording is accurate. But all I said was the first part of the webinar, I'm just gonna give you guys a real of what you can expect to earn from the Forex market. And then after that, we'll go back into the technicals and obviously into sussing out our own market potential opportunities so that we can start trading for ourselves, as well as obviously with my assistance and my mentorship and my projections. Now, again, you know, if you look at the Telegram chat with regards to the gold signal, it was like midnight when I spoke about when I sent a message. Let me just double check now what time I sent that. That gold did reverse as suggested. Yes, it was 11 o'clock, right? 11 p.m. Some of you were asleep by then, but I saw something specific that alerted me that gold was going to continue to go down before it actually went up towards our profit target. And so the thing about trading is you have to make sure that you're not prideful, okay? If you make a prediction and you're wrong, don't be afraid to just accept that you're wrong and kind of run away from the trade and close it out, because opportunities on the market come every single day. Okay, that's one of the things you need to remember. Don't ever be scared to admit that you're wrong and to get out of the trade so that you don't incur too many losses. And don't just hang on to a trade just because you know you don't want to, just because of fear of losing out on a possible profit. Don't be scared with this market. Don't enter a trade just because you're scared that you're going to miss it. Okay, because opportunities come every single day, and when you rush into a trade, okay, or you keep open a trade that you think may go the opposite direction, it's only going to be painful. It's going to be painful, and oftentimes, more often than not, it doesn't work out. Okay, it doesn't work out. So if you have doubts, you can exit the trade. It's not a problem. Okay, but generally, once you commit to a trade, you want to stick it out and stay in that trade until the end of the trade. Okay, and again, any questions, just pop it in the group chat, and I'll answer that. Look at our profit potential. Okay, right, here we go. Okay, so as I said to you guys, Forex is all about giving yourself the edge. Okay, now in order to give yourself an edge, you need to understand risk management and your profit potential so that you can always ensure that, look, at the end of the month, I'm going to be in profit. Okay, if you can just understand what I'm going to teach you today, then you should always have an edge. And this is not so much to do with actually being able to find great opportunities. Listen, there are some awful, horrendous traders out there that still make profit on a month-to-month basis. Okay, and as I said to you, they're not good traders. They're not great traders. But what they do understand is risk management. They always have an edge when with regards to their risk to reward. Okay, and that's what we're going to look at today. Okay, so you guys can see this presentation, this PowerPoint. Is that correct? You guys can see it? Or what's on my screen? PowerPoint? Okay, yeah, fantastic. Okay. Okay, so how much money can I make in Forex? Now, first of all, David, you're a bit more familiar with this, but property, right? Property is what is considered one of the best investments you can make if you have a lot of capital. Okay, you invest in property, you're considered good. You've got no worries anymore. Now, in actual fact, yeah, okay, but in actual fact, how much does property actually pay you? Okay, well, some are shocked, some are not, but people are so excited about property, but in actual fact, on average, it only pays you 10% profit per year. That's per year. So you put your capital into property. On average, each year you can expect your property to go up in value by about 10%. That's in London. Okay, so that's prime time. That's the primary areas in London. You can expect a 10%, and that's considered massive. That is considered massive. So if you can even get near to this with Forex, wouldn't that be considered great? Well, in trading in Forex, on average, a profitable trader should aim for a return of 10 to 20% per month, not per year, per month. Property, you can expect 10% per year. Trading, you can expect 10 to 20% per month. Okay, and that's on your deployed capital. Now, that's just an average. Personally, I oftentimes I achieve more than that. But again, this is an average, and this is something that you should aim for. Okay, as I said, some achieve more, some achieve less. But the first aim is to just not lose money. Okay, you want to, the first objective is to break even. Second objective is to achieve profits. Third objective is to achieve a specific profit target. Okay, which should be in the region of 10 to 20%. I aim for 30%, but again, just as a reserved target, 10 to 20% per month is good. Now, if we compare that to property, you can see that trading is quite rewarding already. Okay. Okay, so let's move on. So, risk management and profit potential. I've spoken to you guys briefly about your risk to reward per trade. Okay. In fact, I think here I've just seen something that's not that shouldn't be 121.4. Okay, so if you have okay, so as I said to you, with any trade that you take, guys, you should always aim to have your risk to reward at 1 to 2 or above. Okay, again, guys, if you don't know what that means, I'll explain it to you really quickly. A risk to reward, which basically means if your risk to reward is 1 to 2, that means let's say you're risking £100, your reward will be £200 if it goes your way. So you're risking £100 and to earn £200. Okay, so you should always be risking less than you're aiming to earn. Okay, your potential earnings should always be higher than your potential loss on any given trade. This is how you consistently make profit, even as a novice trader, even as someone that's not the greatest trader or that doesn't take the greatest trades. And I'll break this down to you much further in the coming slides. Okay, now if you have if you take 100 trades with a 1 to 2 risk reward ratio, just as I've explained to you, and I will teach you how to find these setups. These are not imaginary setups. The majority of the trades that I take, even if you look at the signals I give you, they tend to be at least a 1 to 2 risk reward ratio. In other words, if we risk 50 pips, we're looking to pick up 100 pips on that trade. Okay, so let's say you take 100 trades and they're all a 1 to 2 risk reward ratio. Okay, you only actually need to win 33% of the time and you would have broken even. Imagine that. Let's say you take 100 trades, you've only actually got to win 33 of those 100 trades and you've broken even, which means you've not lost any money. You've recouped all of your outlay. Okay, and then if you can win just 50% of the time, so if you can just win half of the total amount of trades you take with a 1 to 2 risk reward ratio, you will be a profitable trader. I mean, that's amazing. If you can just, an average trader, okay, a mediocre trader, a trader with not all the experience in the world, even a gambler, a trader that doesn't know what he's doing. Remember, if you gamble, it's a 50-50 chance that you can win, right? But if you gamble with a 1 to 2 risk reward ratio, you'll make money. Okay, so if for every time you lose, you also win, you'll make money if you have a nice risk reward ratio. I hope it kind of hits home how important the risk to reward is. Okay, so let's look at this in real time. What does this actually mean in real time? So I've designed a quick table for you guys, so you can see how this actually looks in real time, and what you can expect. Now, I used a £10,000 example for the first one, just so it kind of hits home. This is just an objective for you guys. I know you guys don't have £10,000 to deploy as capital. David probably does. He's a rich Nigerian. But let's just say, you've got a £10,000 trading account. Okay, this is an aim for you guys. Eventually, you will have 10,000 and beyond as your capital to invest, to trade with. Okay, now let's say your total monthly risk, based on an average of 10 monthly trades. Okay, on average, personally, on average, I take between 10 and 15 trades per month. Okay, now let's say throughout all of those trades, your total risk is equivalent to 30% of your account. Okay, because if you think about it, if we take 12 trades per month, and on each trade we have a 3% risk. Remember, on each trade we never risk more than 3%, right? So let's say we take 10 trades, and on each of those trades it's 3%. 10 times 3, that's 30% throughout the whole month. Okay, so that's that. Now let's say we took, let's say on each of the trades we took, it's a 1-to-1 risk reward ratio. Okay, so that means for every pound you risk, you're only aiming to earn £1. Okay, let's say you risk 50 pips, you're only aiming to earn 50 pips as well. Okay, now let's say your win rate is 5 out of 10. Now with a 1-to-1 risk reward ratio, you will need to win 50% of the time to just break even. Okay, as you can see, win rate for break even, the fourth column here, you'll see you'll need to win 5 out of 10 trades to break even. So that's just to have 0 loss and 0 profit. You will need to make 100%, right? You would need to win 10 out of 10 trades to make 100% profit on your total risk. Okay, which again, you would have achieved your total monthly objective of 30%. Okay, with a £10,000 account, 30% is £3,000. You would have needed to win 10 out of 10 trades to make £3,000. Okay, that's with a 1-to-1 risk reward ratio. Again, we want to, anything that's 1-to-1 or below, we don't even want those sorts of trades. Yeah, I'll take them very, very rarely, but ideally we want to avoid those trades. Okay, so that's that. Now let's look at the second example. If we look at the second row, okay, now we're looking at a 1-to-2 risk reward ratio. If you have a 1-to-2 risk reward ratio, you only need to win 3 out of 10 trades to break even. Okay, I hope this sinks in. If you take 10 trades with a 1-to-2 risk reward, fantastic. That's precisely, David. Okay, precisely. If you have a 1-to-2 risk reward, you only need to win 33% of your trades, and you would have broken even. Okay, as in at that point you would have recouped any loss. Okay, now if you have 10 1-to-2 risk reward ratios, you will only need to win 66% of your trades, and you would have achieved 100% profit. 100%. Okay, on your total risk amount, which is equivalent to 30% of your total account balance. Hope that makes sense. So 1-to-2 risk reward, you only need to win 6 out of 10, and you've made 30% profit for that month. Okay, any more than that is obviously more profit, but these are just specific examples. Again, if we go down to the last column, with a 1-to-3 risk reward ratios, you take 10 trades with a 1-to-3 risk reward ratio, you only need to win 25%, and you've broken even. Now if you can win 50%, you've achieved 100% profit. Again, 30% profit of your total account balance. So clearly, the higher the risk reward of each of your trades, the easier it is to break even, the easier it is to make profit. I've got another example with a smaller account balance. As I say, you've got £1,000 account balance. Okay, again, same risk, 30% risk throughout the whole month. Okay, risk to reward 1-to-1. Okay, if it's a 1-to-1 risk to reward, you need to win 5 out of 10 trades. You need to win 50% of the time to break even. You need to win 100% of the time to make 30% profit of the total month. Okay, or your total account balance. Okay, if you have 10 1-to-2 risk reward ratio trades, you only need to win 33% of the time, and you've broken even. You only need to win 66% of the time, which as a profitable trader should not be a problem for you. Win 66% of the time, right, and you've got 30% profit for the whole month, for your total account balance. Okay, with a 1-to-3 risk reward ratio, you only need to win 25% of the time, and you've got yourself a break even. You only need to win 50% of the time, and you've got yourself a very profitable month. Okay, now even with these examples, you've got to remember I'm using specific examples, so I'm saying you need to win 50% of the time to achieve 30%. But even if you win 40% of the time, or even 30% of the time, you would have still made profit. Okay, and so any questions to reward ratio, again, you know, if you can understand the art of just tipping the odds in your favor, listen, you will always make profit in forex. Always, always. But remember when I'm speaking about risk to reward, and remember when I'm speaking about wins to losses, I mean you set a target, you set a profit target for your trade, and you let your trade run to that target. Okay, because it only counts as a win if your trade has run to your target. Okay, and so you really need a lot of discipline to allow that to happen. But this is a general understanding of how you can tip the odds in your favor by sussing out high risk to reward trades. Okay, tip the odds in your favor, guys. The best risk to reward for beginners. Well, again, it just depends on what you can find. I mean, if I give you an example, if we look at, let's say, let me look at a nice high risk to reward I've taken recently. I'll show you. Okay, here we go. Now, if you look at our Australian dollar, New Zealand dollar trade that I took a few days ago, as you can see, our risk reward ratio, which is shown right here, is 2.8. Okay, it's 2.8. That's a very good risk reward. In other words, I only risked 58 pips, but my aim was to achieve 165 pips. Okay, now with that one trade, it will take me almost 3 losses in a row to wipe away my profits, but it only took me 1 win to get all of those profits because I tipped the odds in my favor. So for a beginner, you know, it's the same principle. You still want to be finding the highest risk to reward that you can find. But I'll teach you again. You need to be taught how to find high risk to reward ratio trades. Well, yeah, 1 to 5 is great. 1 to 5 risk to reward is great. But you also have to remember the higher the risk to reward, the less likely you are to win the trade. Okay, that goes without saying. If you have a massively high risk to reward, for instance, if we go to this, let's say the Euro Japanese yen, let me delete everything here. Let's say I had a mad risk to reward like this. Okay, let me just draw risk to reward. Let's say I had, let's say, a like this, yeah. Let's say my risk to reward, as you can see, let me take it a bit down. Let's say from here, yeah. My risk to reward was like this, all the way up there for the target, and this is my stop loss. So that's like let's make it a 10 pip, a 10 risk to reward. As you can see, the risk to reward is right here. It says risk to reward ratio 10.2. Right, that's where you see your risk to reward, and this is a great tool for working out your risk to reward. Now, with something like this, yeah, great risk to reward. You know, you've got a high probability of achieving your target. You've got a high profit potential here, but the risk to reward is just it's unrealistic. And more often than not, if you have a ridiculous risk to reward, you're going to get stopped out of your trades. Okay, you're going to get stopped out. You're not going to make any money because your stop loss is just way too tight. Okay. So again, you have to be realistic with your risk to reward. Whenever you take a trade, make sure your risk to reward is reasonable. And I will show you how to suss out these great trades where your risk is minimal and your reward is fantastic. Okay, whilst your risk is still sufficient to allow the trade to get to where it needs to get. Okay. So does that make sense, guys? Yeah, Tyler, how you doing with that, man? Yeah, you got that? Cool. Cool. Calm, fantastic. Okay, so next thing we wanted to go to is straight back to our technicals. Let me just save that. Straight back to our technicals now. Again, I told you we're going to start getting into the nitty gritty, and you know, soon I'm going to be asking you guys to send me some signals. Okay, that's where we need to get to. I need some signals from you guys soon. Yeah. So that's really where we need to get to. Now, remember, I've always spoke about charts speak, which allows you to determine where the price is going to go. I always spoke about that. Okay. Now, this is a bit of a technical language, a few sentences that I've put together that will help you just to understand what the charts are saying to you whenever something happens. Okay. So, okay, we've already spoken about that. If we go straight to the third bullet point, which is the support. Remember what I said about support? All it says to you is, I am currently very undervalued based on historical data. You might want to buy me because investors might start to. That's what, if the price is at a very strong support point, which means a support that has been hit more than once and has rebounded from that area, okay, and a support that is, on a relatively high time frame, like a daily or a weekly or a monthly chart, okay, that's a strong support. Now, if the price gets down there, it's telling you that, look, I'm currently undervalued. You might want to buy me now because investors are probably going to start buying me at the same time. And so that's an indication to start to buy the asset and take it up to a higher value. And resistance is, the exact opposite. I'm currently very overvalued based on historical data. You may want to sell me. Okay. Same way resistance. If it's a strong resistance, remember what I said about strong and weak resistances. You want to find the strongest resistance. If you find a weak resistance, it won't mean anything, and it will just break past it like nothing, like there was no resistance point there. Be very careful with where you draw your support and resistance. Okay. And then you've got uptrends. What an uptrend is saying to you is, look, a lot of people are buying me, and I probably won't reverse until I become overvalued or there's significant news to take me down in value. Okay. And if we look at downtrend, similarly, a lot of people are currently selling me. That's why obviously it's going down in value. And this is probably going to continue until I become undervalued or some powerful news comes out and changes my direction. That's what a downtrend says to you. And you've got consolidation. Okay. Now, do any story? So when you say support and resistance lines, it's comparing it to what it's usually like based on past lines. Yes, I think so, Tyler. Yeah, when I'm talking about support and resistance lines, it's talking about where the price has reversed from in the past, right? So remember I showed you the lines where price goes up there or it goes down there, and then it rebounds and goes the other direction. That's a support or a resistance. It's based on what's happened in the past, precisely. Yeah. Do you guys know what consolidation is? Consolidation. Have I explained that to you? No. Okay. Tyler, do you know what it is? Consolidation? Don't think so. Okay. I'll show you consolidation now. All consolidation is when the price is it's when the price is indecisive. In other words, the price doesn't know whether to go up or whether to go down. And so instead of going up or down, it just stays within a range. Okay. And I'll show you some consolidation now. Okay. Very important consolidation, because what happens after consolidation is very important. And I'll show you if I just draw, a, here we go. So this right here is a massive consolidation. What's been highlighted as blue is a consolidation. Okay. And within a consolidation, you will generally have a tight resistance right there and a tight support. I'll say support is give or take around about here is our support for this consolidation. Okay. Give or take, right? Now this is the euro pound, and this is a consolidation that's been happening for a few days. Okay, it recently only just broke out of the consolidation. In fact, what we'll do is we'll draw another support, right? Because as we can see, the price is rebounded from two places. It's rebounding from here a few times, but also it came down to around about here and also rebounded. So we can have like a support zone, which is between these two lines. Okay. Now, the reason I say this is consolidation is because we can see that the price is just staying within a specific area. You guys can see this, right? It's staying within this area. It's going down and then it's just reversing. In fact, if I just draw some arrows here, you see exactly what I mean. The price is coming down to here and it's just going back up without any specific direction. Then it's coming up to here. Then it's just going back down. Okay, and it will do generally when you've got a consolidation, it will stay within this range. So whenever it comes up to the top of the range, it reverses and goes straight back down, comes down to the near of the bottom of the range, like here, which is another support. And then what happens? It goes straight back up. This is a consolidation. Now, the reason it's very important to understand what consolidation is because once a consolidation is broken, the price is about to do a Mazza. Okay, so whenever I see a consolidation like this, I always keep my eyes peeled because once the price breaks out of the consolidation to either direction, all that means is that the price has made up its mind and it's about to go in one specific direction. Okay, so what did we have after this consolidation? Well, we had price breakout, as we can see right here. Right here, we had the price breakout. Okay, it broke out to the upside. Okay, right here on this candle right here, on this green candle here, price broke out and shot up to the upside. Okay, now what that tells me is that, you know what, it's likely that we're going to have an uptrend. Okay, but what did price do? It came back down for another retest and now it's going back up for new highs. I remember what I said to you guys, the price moves in peaks and troughs. Peaks and troughs, peaks and troughs. And so, yeah, we had, it broke out to the upside. Now, when it broke out outside of this consolidation, that tells me that the overall trend is up. Okay? Now, that doesn't mean that the price is just going to continue to shoot up without coming back down. No, what it will do is it will come back down a lot of the time just to confuse the traders before making its next move up. So as we can see, it came back down, okay, nice and slowly, and now it's going straight back up, okay? Now, what's important, how I know this is an uptrend, guys, let me tell you how I know this is an uptrend, because look at it, okay? It came back up. When it broke out of initial consolidation, what did it do? It came up to here, okay, right here, okay? Now, this is something that's called a higher high, right? Because the price came up, broke out of this consolidation and it made a new high. Okay, in other words, the previous high was down here and it broke out and made a new high up here. Okay, so that tells me, yeah, we've got an uptrend. You know, we've broken the resistance and we're going upwards. However, what happened? The price actually came down again. Now, at this point, a lot of traders would have been confused because it's like, wait, you just broke out to the upside. I thought you were going to keep going up. Oh yeah, well, again, the market is very volatile, so sometimes it can go up and down, peaks and troughs. But one thing's for sure, when it does come back up, if it breaks this resistance point, then we know it's a clearer uptrend. And what do we have? Oh, quite clearly, we've broken this resistance, and now we've made new highs on this euro pound. Now we're going up again. So now what do you expect? Well, what you can expect, guys, is for the price to come back down to maybe around about here. Okay, in fact, it'll be better if I draw an arrow to illustrate this particular move that I expect here, because the euro pound is something that I'm looking to trade very soon. But again, remember what I said, price moves in peaks and troughs, and so we can expect another trough. In other words, another retracement back down to this previous resistance before price shoots back up and makes a new high, coming up towards 0.90200, which again is another resistance point that I've got here. And if we scale up to the weekly chart, you'll see why I say it can go up to 0.090200. Well, okay. And again, weekly resistance 0.9200. You can see right here, a few, or even a few months ago, this was a resistance. And so oftentimes price will just keep going in one direction with the trend until it reaches a resistance. And so I'm expecting the price of the euro pound to come up to this resistance in the coming days. Okay. Have I lost any of you? Hope you guys are here. Fantastic. Okay. Perfect. Fantastic. Okay. And so remember, peaks, troughs, peaks, troughs. Now, just a bit of again, back to with regards to David, what we were speaking about earlier is, remember what I said to you, when you guys start to trade live money, okay, remember with a scenario like this, with this euro pound, we would have been looking, again guys, I want to stress this as much as possible. If there's anything you need clarity on, you better ask it now, because when you start trading live funds, you know, it's going to be damaging to learn these lessons. So anything you need clarity on, please ask. But for instance, okay, now let's say we took the trade as soon as the price broke this consolidation. Remember, this is the consolidation, yeah? I look at the 4-hour chart when I want to see something specific, okay? All of the charts are good for different things. But again, remember, we had this consolidation zone, euro pound, and then we broke out of this consolidation zone and made new highs, okay? Made new highs, came up here. Now, one could say, okay, we're going to wait for the price to come back down to our previous resistance point, and then it will rebound, because remember, when a resistance is broken, what happens to the resistance? It turns into a support. Okay, when price came back down to this resistance, which is now a support, we could have expected it to go back up. And so here, just to give you guys, you know, I just want you guys to understand the risk to reward notion and concept that I was explaining. Is, let's say we wanted to enter right here at this resistance. Okay, this is a genuine trading opportunity, guys. I mean, this is not, I'm not just having fun here. This is a genuine trading opportunity. Let's say we were waiting for the retracement and we entered right here. Now, our reward would be up here. Remember what I said? I'm expecting the price to come up to 0.90200 because it's a weekly resistance. 207,642. Well, yes. Well, yes. As you can see, guys, it did come down. You're right, Tyler. It did come down to 0.642. It did. It did come down there, right? Remember, it came down there, but then it reversed. It did come down there, and then it reversed and went back up. Now, let's say, because I know that this is an uptrend, let's say I wanted to take this entry down here. Okay. Well, this would be my entry. Okay, this would be my entry. I would have, my entry would be down here because I know this is a support point. Okay, so my entry right down here. Okay, now my stop loss, I would put my stop loss down here below the next support. So just below the support. Okay, so this would be my stop loss right here. Right. Again, you want your stop loss to be significant so that it doesn't get hit. You don't want your stop loss to get hit. You don't want to make your stop loss too wide to where it's easy to where you're risking too much money, but you do want to make your stop loss wide enough so that if the price does come down, it doesn't hit it. Okay, so I'll put my stop loss just here below this support. Okay, just here. This is my stop loss. Now my profit target, guys, okay, for a real trade here will be up here. Because remember what I said to you, I'm expecting the price to come all the way up to here. Okay, so right here, we've got a 5.2 risk to reward ratio. Okay, and these are the sorts of, I mean, this is maybe not the greatest example because you don't see these trades every day, but it's an example of a great trade to take because you're not risking too much, but you're expecting to earn a lot from it. You're expecting to earn 261 pips whilst you're only risking 49 pips. Okay. And so I hope this makes sense to you guys, just with regards to consolidation and how when we break consolidation, you can expect a massive move. I mean, even if it's not in a specific direction immediately, you know, as you can see, as soon as consolidation was broken, we started getting massive waves up and down, massive waves, because now the price, what the market's telling us is, look, there's a lot of money coming into the market now. So now we can start moving in big waves. Okay. So whenever you see consolidation, it's another word for it is accumulation, because the market is just accumulating orders and then it will decide where it really wants to go. Okay. So that is that. Now the next thing we're going to go on to is we are going to go on to trend lines. Okay. Now just bear with me for one moment, guys. Let me just go and get water. Be back in a second. Okay. Right. Okay. Sorry. Yes, Tyler, let me answer your questions now. That's why I'm getting confused on how far, it'll come down. Okay, right, let's go back to that. Very good question, Tyler. Very, very good question. Shows you're engaged. Okay, now you asked a very good question, which is, how do I know how far it's going to come down? Very, very good question. And the answer, Tyler, is sometimes you just don't know how far it's going to come down. Okay. Now I'm going to give you my 2 cents on this and how you could have known how far it's going to come down. Okay. Now if I just delete this, because again, remember what I said to you, there's not one person on this whole earth that knows exactly what the market's going to do 24 hours a day. Or what you can do is tip the odds in your favor, and put yourself in the best position to be right. Okay. Put yourself in the best position to be right. Okay. Now I'm gonna give you a list of odds. A list of things you can look at so you can potentially know where the market's going to go. Okay. So, for instance, right now I've just drawn the resistance point, which is right here. Let me just draw a bunch of arrows so I can just use them whenever I want. Put some arrows there. Okay. Right. These I can use. Okay. So we've got the euro pound, yeah? Okay. Now, remember I said, okay, so we had consolidation for a few days. The consolidation started on the 12th and it didn't end until, wait, hold on. It started 26, 21. Okay, it was quite a long period of consolidation. This was about let's say, sheesh, it's quite a long time. In fact, let me look at on the daily. It's quite a long period of consolidation, actually. It's about 2 weeks, give or take. It was about 2 weeks of consolidation where price stayed within this range. Okay, as you can see even better on the daily chart. Price stayed within this range. Okay. Now, I must say, remember, I was watching this euro pound because I actually wanted to trade it. So I actually want to show you exactly what I saw on this. Okay. Now, first things first. Okay, you guys pay a lot of attention. David, are you there? I'm gonna break down this specific pair and exactly what I saw on this pair. Fantastic. I'm gonna show you exactly what I saw on this euro pound. You're really going to want to pay attention. This is something that's going to be coming more often in you know, in the future, probably in next month's webinars. But let me show you exactly what happened on this euro pound and how you can expect to understand what is going on. Okay, so first things first, what have we got? Let's use our trend line. And I'll kill two birds with one stone. I'll show you guys how to use the trend line. Okay, now first things first, how do you detect a trend? Well, if you've got basically you draw any resistance you find. Okay, any resistance. Right here on the daily chart, we've got a resistance here. We're looking at the bottom for now. Yeah, we're going to start from the bottom and then we're going to get to the top. Okay, we've got a resistance here. Okay, as the reason I say it's a resistance, price came up there once, came up there twice. Okay, if a point is hit more than once and it reverses from that point, it's a resistance. So simple, easy, not too strong, not too weak, but it's a resistance. Okay, now at what point did this become an uptrend? I'll tell you when. As soon as the price broke and closed above the resistance on this candle right here. Okay, right? In fact, not even this candle, on this candle. Okay, remember, we've got the resistance, hit it once, hit it twice, came up, and it broke above it. Now we've got a trend. Very simple. I hope that makes sense, guys. How do I know we've got a trend? Well, we've broken the resistance. That means the buyers are taking over. This price is going up. Very simple. So now I know we've got an uptrend. So immediately, guys, as soon as I saw this, I know, you know what? My overall bias is long, is buy, is bullish. In other words, I'm not even going to think about selling this asset. All I want is opportunities to buy because I know we've got an uptrend. Okay, so the next thing I've done, I go down to a 4-hour chart, right? I go down to a 4-hour chart. Why do I go down to a 4-hour chart? Well, I want to draw a trend line. I want to draw a trend line because you got to remember, support is not only lines, it's also trend lines. So let's go and let's draw a trend line. You can see right here, guys, you've got your horizontal line and you've got your trend line. Trend line is actually the first one. A lot of people use this. There, you've got your trend line. Now, when drawing the trend line, what you want to do is you want the trend line to touch as many points as possible and reverse. Okay? Right? This is your trend line. Your trend line is based on, it's basically a trend line support. Okay, you draw your trend line and you want your trend line to touch as many points as possible where the price has reversed and continued the uptrend. Hope this makes sense. For instance, the first time was right here. Well, this is one dodgy arrow, man. Sheesh. First time was right here. It touched and it reversed. Second time, right here. Touched and reversed. Okay. Third time, if we extend it, was right. Okay. The base of the trend line. Okay, good question. Base of the trend line can start literally wherever you see there's some confluence. Okay. Base of the trend line could start wherever you see the most points touching. You just want your trend line to touch as many points as possible, right? You want to see the price reverse as many times as possible from that one line because it makes it stronger. The more times the price reverses from the line, the stronger it is. That's why we've drawn this trend line right here. The base of the trend line doesn't really matter. It's how many times has the trend line been touched, okay, or near to being touched, okay? So we've got our trend line 1 here, 2, and 3. Very strong trend line, okay? Now, this right here, these are potential entries, guys. Okay? Very simple. Now, as you can see, whenever the trend line is touching, it's continuing upwards with the trend. So you can say, okay, whenever the price comes back down to the trend line, I'm going to buy it. I'm going to buy it because we can see that the price keeps reversing from the point at which the trend line touches. Okay. However, where we started to consolidate is when you can see that the price is no longer reversing from the trend line. Let me extend that so you can see the first time we saw price stopped reversing from the trend line was right here. You can see price came down, it broke below the trend line, and then it went back up. Okay. Well, if we look at the second time, it broke below the trend line again right here. Okay. Broke below the trend line and then eventually came back up. But we can see that the momentum is slowing down. Okay. Okay. Here we go. Now we're getting into the meat, guys. You need to know how to use a trend line when you've got a trend. It provides opportunities for you. Whenever the price comes and touches the trend line, because we know we've got an uptrend, remember, the first thing I do, I need to know what is the trend, because the trend is your friend. The trend is your friend. If the trend is up, you want to be going in the same direction as the trend. If the trend is down, you want to be going in the same direction as the downtrend. You want to be buying if it's an uptrend. You want to be selling if it's a downtrend. Okay, so now where we start to see a change in the momentum is when the trend starts to break and the price is no longer respecting our trend line. In other words, it's actually coming down below the trend line and it's getting comfortable. We can see price is starting to get comfortable. It's starting to stay below our trend line now. So this is actually a big indication that our price is slowing down. And what happens after? Well, surely enough, we entered into consolidation. Okay, because the price doesn't have enough buyers anymore to push the price continuously up. So it stays in the same zone. It doesn't move anymore. It stays in the same zone. Okay. Now, oftentimes when we've got a consolidation, it means the buyers are exhausted. The trend has stopped. It's not going to go up anymore unless we get something fresh that pushes the price back up. And what did we get? Well, we had some European data that pushed the price straight back up. Okay. Now, with regards to Tyler's question, now again, just before I continue, guys, I was buying here. Okay, if you look at my Instagram, you'll see I had some entries. I can't remember specifically where I got in. I had some entries where I bought the euro pound and I made some quite significant profits just in this up move on this upwards trend. Okay, simply, I mean, I kept it very simple. I knew there was an uptrend. I waited for a great entry because remember, the trend is your friend. The trend is the strongest thing in the market. Okay, so you want to follow the trend, right? And I got some entries here. Okay, I did buy and I held it for quite a while. Okay, I'll have to show you that specifically another time. But if we wrap up here to Tyler's question, now Tyler, you asked a very good question. How do we know how far the price is going to come down? Again, we don't. But one thing we can do to determine this is look. Okay, remember this is the resistance of the consolidation. Yeah, this right here was the resistance. Okay, we know that's the resistance. And so we know when price comes down back to this resistance, it's very possible that it can reverse and go back up. Okay, but clearly, very clearly, it didn't. Price didn't reverse. It didn't. In actual fact, it went straight through this support line. It went straight through it and it went down. Now, at this point, I would have been scratching my head and thinking, okay, this price still hasn't made its mind up because it went straight through. If the trend was still going on, it would have reversed from this line. Okay, so Tyler, my answer to you is as soon as you saw this red candle, this big scary red candle break and close below this resistance line, okay, it's an indication that the price is not trending and you have to wait for some more confirmation. Does that make sense? Yeah, so whenever you see the price, it pushes below and it closes. You're looking for the close of the candle. You want to see the candle close. Okay, if the candle closed and it was just above this resistance line, then yeah, it's respecting it and we're probably going to see another upward leg. But because the candle closed below it, that's an indication that we're going to continue to go down. And eventually we did continue to go down. Okay, now what we have is the continuation of the trend. If you look right now, price has made a new high. It's come up below this and it's made a new high. So our trend is back in effect. So now one can expect a retracement to come maybe down here or maybe even just here. It may just come here and stop here at this resistance and then we may shoot up again straight up to our targets at 0.90200. Okay, but again, you have to watch the price really clearly and see, do we have a lot of momentum? I mean, there was a lot of indications there, Ty. I mean, I'll be real with you. For instance, when you see three red candles in a row, what does that tell you? That tells you that there's a lot of momentum. So if you see massive momentum like this going towards a potential entry point, you need to really think and say, okay, um, this seems quite momentous. Let me stay out of this. Okay, because there's a lot of momentum. That means there's a lot of sellers in the market right now. So it's probably going to continue to push down. Okay. Yes, yes, precisely. The the close of the candle is very, very key. Okay, and I'll show you really quickly the gold. Remember, I said to you guys that I was waiting to see where gold closed tonight, and then I'll decide whether I want to buy or sell. Well, let's look at gold. Let's look at gold. Okay. Now remember, the price, the daily chart, the daily candle, it closes every day at 10 o'clock. Okay. So currently gold has closed. This is where gold closed. Now, again, this is a massive indication of where gold may be going. I'll tell you why. We have, this is, obviously I've already done my analysis here, guys. But if we look at gold, this line right here, very strong support. Very, very strong. Very, very, very strong. You can see this line here has been respected many times. This line right here. Okay. This support line. You can see price came down, touched it, reversed, down, touched it, reversed. Even if we go back historically, you'll see that this line has been relevant. Again, right here, price came down, touched it, reversed. Okay. So this line is very, very relevant. Yes, yes, I will do. Again, that's definitely in the pipelines where I'll ask you guys to draw your own support and resistance lines. I'll ask you guys to draw your own trend lines, and I'll ask you guys for some of your own analysis. Definitely be doing that in the near future. But if you look at gold, remember what I said to you. I said I wanted to see where gold would close today. I wanted to see if it closes above this line or closes below this line. Okay. Now, the indication I had yesterday that gold was going to continue to go down was if you look at yesterday's candle, it closed below our support line. That tells me that, look, there's not enough buyers to take the price up. Okay. And so that's why I said to you guys to close the gold trade. However, gold has now closed and breached ever so slightly above this line. So now our gold trend, which is clearly up, as you can see, I've got my trend line here. I've got my trend line right here already. We've got a trend which is clearly up. Okay. And so I can expect gold to continue the up move because we've closed above this line. That tells me buyers are still in control of gold. Okay. So gold can continue to go up, and I expect gold to continue to go up now because we've breached this line and we've closed above it today on this green candle. Okay. Now, there's various things you can do with this to ensure that you get a nice entry and a nice risk to reward. What you can do, if we go down to a 4-hour chart, what you can do is you can wait for gold to come down to an interesting, a key point. Okay. Now, if we look, we've got a little small support point right here. We can see prices reversing from this point here. So what one can do is wait for gold to come down to this line and then buy gold because it's a support point. Okay, you got to remember, if the trend is up, then the support points are going to hold much stronger because the overall momentum is up. So any slight support point is probably going to give us a reversal to continue the uptrend. So if gold even comes down to here, I may consider buying it. Okay, just depending on the momentum. Okay, and so that is what we have for today, guys. I'm going to unmute you if you have any questions for the last 5 minutes or so. You are unmuted. So if you guys have any questions, then do fire away. But I hope you guys are starting to get this, man.
Yeah, I mean, the beginning of the thing, I had a question. What is that?
Oh, have you forgot it? Yeah.
Yeah.
Okay, no worries, bro. But you know, you guys start to understand trend lines, and you can start to detect the overall trend, and you can start to follow the trend.
Right. I remember.
You what? Sorry.
I remembered what I was going to say.
Okay.
Right. Basically, investing.com, the economic calendar,
Yeah.
and you know where it says the currency that it's affecting.
Yes.
So I'm just wondering now. So like I'm looking at today, yeah,
Yeah.
and there was like 4 o'clock in the morning. There was the 3 ball thing for the GPY.
For the GPY,
Yeah.
there's no such currency, bro.
Well, for Japan, in Japan.
Oh, the JPY, yeah.
JP. What did I say? GPY.
Yeah, JPY.
Alright, one sec. Hello. Alright. Yeah, hold on. I'll probably come up. No, I'll do it. Yeah. Alright. I am. Alright, see you then. No. Alright, see you later. Bye. Right.
Uh-huh.
For Japan, yeah.
Uh-huh.
It was something about the Outlook report, something like that.
Yes.
So how do you? So obviously it's affecting the.
Japanese yen, yes.
How would you know what currency to trade with? Because obviously you can do that against the US dollar or the pound or the euro.
All the euro, all the Australian dollar, all the Canadian dollar. You can do it against anything. But again, remember there's 2 currencies in each pair, right? And so you always wanna pair any currency you want to trade, you always want to pair it with another currency that you're familiar with. Okay? So I'm familiar with the pound, that's why I trade the pound against the Japanese yen. I'm familiar with the US dollar, that's why I trade the US dollar against the Japanese yen.
So it doesn't actually. So what? It doesn't actually matter what currency is. So it effectively affects all of them. Right.
Well, what do you mean? Well, do you mean the news?
Like no, like I mean, I had a look at it.
Yeah.
And I had a look at the effect it had on. I can't really remember. Just say, for example, the US dollar. Had a look at the effect it had on that.
Yeah.
And then compared it to the pound.
Yeah.
And different outcomes.
Yeah, again, because remember, with the US dollar against the Japanese yen, it's the US dollar as well. It's going to affect. So the impact, whatever's happening with the US dollar, is also going to come into play with whatever happens with the Japanese yen. So remember, the only consistent currency is the Japanese yen, but then you've got 2 differences, which is the GBP and the US dollar. So if something's happening with the pound, right, or something's happening with the US dollar, well, the way they react is going to be different. Depending on what's happening with the other currency as well. Remember, there's 2 currencies. So yeah, the Japanese yen had a certain effect on the US dollar with the Japanese yen, understood, but it's going to have a different effect on the pound because something else which is different is happening with the pound.
Right.
You get it? So remember, there's 2 currencies.
If you're looking at one thing, you've also got to look at the other currency and what that's doing.
Exactly. So when I'm trading the GBP JPY, I'm looking at the JPY, but I'm also looking at the pound.
Yeah.
You see, and so the way I trade the GBP JPY and the USD JPY is not the same. It's not the same because there's 2 different currencies.
Yeah.
Get it? Yeah.
Yes, come yeah.
Yes. Quality. And so yeah, as long as you get that, that's fine. And was you up? Did you sort of get everything that I talked today with regards to the trend lines and regards to where the candle closes and regards to supports being stronger when it's following the trend?
Yeah, I mean it's very clear to be honest. Yeah.
Yeah, fantastic. So you ready to start giving me signals then?
Sorry.
You ready to start giving me signals? All right, man. So yeah, man. David, are you there?
If you want to lose money, then yeah, of course.
Man. But yeah, I mean, we should expect some more downside movement on the pound, because even if you look at the pound, right? If you look at my screen now, if you look at the pound against the Japanese yen, you can see that this line here, this 23.6 line, the red line that I've drawn, which is a support, yesterday's candle closed below that.
So you expect to go down.
So now it's probably going to continue to go down, because it shows that there are just not enough buyers to keep the price above this support line. So the support's been breached, and it's probably going to keep going down.
Right.
Yeah. Just unless something crazy comes out in the news.
Yeah.
Right. Here we go. Here's Liam. Liam, you're slightly late, bro. Liam.
Shit, bro.
Wow. Liam, you can unmute yourself and you can speak, bro.
Love Island. I need to watch that.
Oh wow! Is it still on? Do you know? I'm like probably the only person in the whole world that's not watched it, man. It's crazy. But
now going back to what you said, mate, about doing the signals and that. Like, I definitely have more of an idea about what I would do now than say 2 weeks ago, innit?
Fantastic. And obviously it's only and obviously we've mainly been focusing on the basics, and so now it's really time to really start helping you to find your own opportunities. That's when you're really gonna learn. And Liam, we just went through some analysis for some currencies and some potential profits, what you can expect to earn from forex, and obviously a bit of risk management as well. But the main portion was really just being able to analyze currencies. I was just saying that I'm expecting more downside on our GBP JPY, just because of the way we closed today, which is quite clearly below our 23.6 support. Okay. And so
can you hear me?
Yeah, I can hear you, bro.
Yes. Can you explain the gold dollar situation, like when we're expecting?
Okay. Yeah, well, again, I'm going to charge you an extra £10 on this month then, because time's gone in it. So I'm joking, bro. I'm joking, man. Anyway, he was like, yeah. You probably thinking this guy's a crook. All right, what was you saying? Gold against the dollar, yeah? All right.
Yeah.
So, if we look at gold now, Liam, yeah, are you still long on that?
No, but I closed it because there's a bit of I don't know, it's just a bit of risk zone.
Yeah, no, definitely. Did you close it in like slight profits then, or was it slight loss?
You what?
Was it a slight profit or a slight loss?
Yeah, like.
Oh, like a few pips loss or a few pips profit?
Profit.
Oh, okay, cool, that's fine. All right, so just quickly, Liam, the reason why last night I obviously posted that I was coming out of the gold trade is because, as you can see, we've got a strong support right here at 1242. Yeah, it's a very strong support, and it's held like 3 or 4 times in the past. And also we've got the EMAs, right? We've got the moving averages that all it's the confluence, and they're all at the same point. And so what I expected, because the momentum is clearly up, right? I expected that on the day I gave the signal, we were going to close and break this resistance. And you know what happens when we break a resistance is we break with quite a lot of momentum. So I was expecting us to hit our target. But as you can see, it sustained below this resistance for those last few days. Right, and so because it closed below the resistance, it tells me that there's not enough buyers on the market to push the price up, and so we're probably going to get a reversal, right? And the reason we're probably going to get a reversal is because you're going to have a lot of people taking their profits at this point, and then the price will start. Yeah, exactly. They're scared because they're looking at it and they're thinking, look, why ain't it breaking? It's probably going to reverse because it's a strong support, right? And so I was expecting the price to come a bit further down, maybe even touching our stop loss before then ripping up and continuing the trend upwards. However, today we got the close that we finally needed. Although it was really, really slightly above, you can see that we did close just above our support at 1241. Yeah. So now it's time to really start to edge in I'm going to wait for a slight retracement, hopefully tomorrow or probably next week. Probably next week, to be honest. And then we can start to buy this up in structure.
Then
What's that?
a retracement to the downside and then back up.
Exactly. Now, ideally, I mean, the best entry would be right here, which is our previous daily resistance, which is at 12:30, right? And 12:30 is a very, very important point, because even on the weekly chart, if I just show you the weekly, 12:30 is very, very important for gold. And I mean, if you look at it right here, I mean, come on.
Yeah.
You had it respected here.
On the weekly.
On the weekly, yeah, on the weekly. Right. You had it respected here. You know, you had it respected here with the wicks as well. 12:30 is really important. So if we can get a retracement back down there, that would be fantastic. But it's probably not going to happen because it's a bit too far. So it's not going to happen. So if we can even get it, if I could get in at 12:35, I'd be happy. Yeah, man. So we'll probably.
If we wait for the retest, of support, even if it stops at resistance again, we'll still be in profit, if you know what I mean.
Wait, could you just say that again? It cut out a bit.
Like, if we wait for the retest, of the support when it goes back down a little bit, and then we enter there, we'll still be at an advantage, because even if it stops at resistance, we'll still be in profit, if you know what I mean.
Exactly, of course.
Is that right?
Yeah, definitely. I mean, you mean that if we get in, I'll draw the potential. So you mean if we get in here? I love David, man. So you mean if we get in here, and it stops at this resistance right here? Do you mean? Like there? Yeah, we'll still be in profit. Yeah, definitely, 100%. Okay. But I'd be expecting the price not to stop there and to continue to go up, just because of our momentum. Yeah, definitely, because our momentum is still up. So my next point of a stop is at 12:59.
Yeah.
Okay. 12:59 is very significant. It's also a 61.8. If I just draw the fib, it's a 61 point, just below the 61.8. So we're actually playing a bit cool. But that's our next point for a stop. So that will be our target, our profit target right there. Definitely.
So are we just gonna enter as soon as it closes resistance, or are we gonna wait for the signal, like the entry candle?
It really, do you know what? There's a few things that factor. I mean, sometimes what will happen is it will just spike down with like some sort of news and then continue the uptrend. And so I might just actually have a pending order there. But that pending order probably won't get touched, so we'll probably enter before then. But what I want to see is it come down, retest some sort of support, and then show signs of a reversal to continue the trend, and I'll enter. Yeah. So if it comes down to even, do you know what? Even if it comes down to this, let me delete this. Even if it comes down to, just this support right here on a 4 hour, even if it comes down there, and it shows me signs of, look, a reversal, because I'm so bullish on this pair, and I'm so certain that it's going to continue to go up, especially with our daily close today, I'll enter. Okay. Now, with regards to where my stops and my take profit would be, my take profit would be at our target at 12:59. However, my stops, I'm going to want my stops to be just below this trend line. Okay. This trend line right here.
Yeah.
I'm going to want my stops to be just below that. So it's quite a wide stop, but as you can see, the risk to reward is 2.6. So it's quite a good trade to take. And my stops are below my EMAs, right? I've got two EMAs, EMA 50 and EMA 100, and I've got EMA 200 up there. But these EMAs have been a godsend for me in the years before. And so,
really?
I mean, yeah, man, godsend. I mean, they actually
I've never used the EMAs. I've never really understood them, sort of thing.
Bro, EMAs are they basically, for me, all they are is added confirmation for a trade.
Yeah.
Yeah, it's added confirmation. So I have my stops just below.
Where confluence meets, sort of thing.
Yeah, exactly. I did, like, for instance, with this daily support that we've got at the top here on the daily chart, we've got we've got two EMAs there as well. So that's just added confirmation that price is going to struggle to get past there. As you can see, two EMAs there. It's three EMAs. All three EMAs meet here, and so that's why price really struggled to break above it. Even though there's a lot of momentum to go up, it still struggled because it's such a strong point with the confluence.
What is it when the EMAs are closer together? It's less strength.
No, it's more strength. right?
Okay.
If EMAs are all together like this, it's added confirmation that the price is going to struggle to break the resistance.
Yeah. So that is that. Does that show strength to the downside as of now?
Well, no. The reason I say no is because today we just broke above it and we closed above it. We closed above the EMAs, right? But the fact that it took us 2 days to break and close above the this point tells us that the EMAs and the resistance was very strong. Because usually when you've got a strong upside trend, these resistance points are broken like that, like they ain't even there. But it was a struggle because it was such a strong point, man. And so now I expect more upside, but probably after some downside potential.
Okay.
If we don't downside, I'll probably enter. I mean, it's a win-win situation because even if we continue to go up, then we'll just enter at this point instead, at this resistance, right? At this resistance, and then we can have a tighter stop. So win-win situation, man. But I'll just see what happens tomorrow, and then take my decision. Definitely, bro.
Sick, mate. Put it on lockdown, innit? No matter what happens, bro, money's gonna be made.
What'd you say?
No matter what happens, money's gonna be made.
That is it, bro. Regardless, bro. I've got gold in a chokehold right now, brother.
You know that.
I got it in a chokehold. Well, whatever happens. Yeah, that's it, man. Whatever happens, I got this on Smash, bro. And so, yeah, man. But as I was saying, like the webinar that we done today, obviously, it's going to be on YouTube. It's quite a decent one because we went through some analysis. So if you run through it, it'll be good, man. Definitely.
Yeah, when's that going to be uploaded, bro?
It'll be uploaded tomorrow.
Tomorrow, yeah. All right, cool.
All right, man. Bless, brother.
Yeah, that's cool.
All right, safe. Hey, Tyler, take care, man.
Cheers, man.
All right, nice one. Take care.
Boys.
See you later, guys, man. Love. Yeah.
Laters.